Hello again. In this technical analysis of the stock market video, I'm calling it relentless because that's what this market has been over the last 8 weeks. We've had a relentless push to the upside, and I'll show you why. Really, I think it's the Dow or the S&P has stayed above the 10-day moving average on a daily basis and not broken below it for the longest streak in like three years or something like that. So we're going to take a look at that. Then we're going to take a look at the high yield bond fund, and we're going to take a look at the dollar index. So stay tuned. Okay, let's start off here by looking at the Dow on a weekly basis. It was up 776.92 for the week. Big move here. It's been up 8 weeks in a row. These little doji weeks were actually slightly up. So yeah, it's been up 8 weeks in a row. Pretty big move to the upside. Let's take a look at the daily. Here's the daily count. I continue to call this a sideways wave 2. I believe that we're working a flat and 3-wave A 3-wave B, and a 5-wave C. That is what fits this count the best. Initially when we first looked at this very early on, I think like 6 to 8 weeks ago, I thought that this was, possibly a 5-wave. But the more I look at it, I've got an alternate count with a 5-wave in it. It just doesn't fit very well at all. And the 3-wave fits the best, and I'm going to show you real quick. This is what I call my hourly chart. It's a 65-minute chart. It divides the day equally into 6 bars, so it works beautifully. And here's what I think is going on with the B wave. Okay, I believe it's a combined WXY. We had these funky little corrections in here, okay, and this just fits it beautifully in terms of an ABCW, the zigzag X, and then an ABCY in here, and it just really fits the pattern well. Of course, the 3-wave over here with A is no problems with that, and then we've been working this 5-wave to the upside. That's pretty obvious move to the upside for wave C. So the 335 for a sideways flat on the daily view. Okay, let me go back to the daily chart. Now this flat pattern in here, what I'm talking about in here with this A and this B and C, which is really, a sideways type of move that's going on. Have we seen this kind of thing before? Now, what's interesting is where we're at in here, we haven't pushed beyond this point here, the A wave here. This doesn't invalidate anything. It just defines the flat as whether it's a running flat or an expanded flat. There usually is more instances of an extended flat type thing, which you can call an irregular flat. I think R.N. Elliott originally called them irregular corrections, okay? And so I think if we push up just a little bit higher, that's exactly what we're going to have. Let me get that data point. Let me see where we're at in here. The high is 980, 25,980, and the high on Friday was 25,883. It's not gonna be very much to come up and take out that point, push above that high, and become an expanded flat. It doesn't really mean a whole lot. And when I drill down and I look at the wave count in here, I think we are very, very close. We're getting divergence now. Divergence can always, go away if it keeps pushing higher. I mean, there's no doubt. I realize that. The other thing I wanted to show you is when you look at the moving averages, here's what I was talking about. Look how we have, actually it's the S&P 500 that has shown that the longest streak in like 3 years. But even here, when you look at the Dow, it's only closed below the blue line, which is the 10-day exponential moving average. It's only done it twice, once and slightly here on February 11th. But again, no follow through. Didn't get 2 days in a row. We didn't start to break down and roll underneath like we did at the top back in October. It just hasn't happened yet, okay? That's what I'm looking for. Okay, let's take a quick look at the high yield bond fund and see what's going on with that. HYG has continued to confirm the market move to the upside also. You notice how it continues to ride ever since the last day below the 10-day moving average is January 3rd. It's just stayed right above it, although it started to weaken a little bit here the last couple of weeks. Look at the divergence that's showing up here on the RSI as this has continued to push higher. Higher highs not being confirmed on the RSI. And again, I use a 10-bar RSI. I like it better than the 14-day. It's just personal preference. When I look at DI plus here on the directional index of the green line, it's not confirming the move to higher highs at all either. Okay, so really looking for this to break down. But again, you got to start to get it to closing below that 10-day and rolling over as a first step. So that's the picture on the HYG. Let's take a look at the dollar index. Okay, I just watched a video from the Money Show where the Elliott Wave guy was talking about what he thought was going on with the dollar index, and I was actually very surprised. Number one, he started his analysis up in here, and why am I doing that? I always grab the wrong marker for whatever reason. He started it up here, okay? And so then he's talking about how we had, actually he had an A, B, C, something like that, and he called this a reactive, sideways move up in here, expecting the dollar to come back down or whatever. I was actually shocked that he was starting his analysis with this with the high right here in 2000. I was like, really? For the dollar index? Because if you look at it, and let me zoom out a little bit. Again, I'm on a weekly chart. Let me zoom out. Let me pull in a little bit more data here if I can. I hope I can. Actually, you know what? Let me move to a monthly chart, and that'll help. Okay, here's what I was just talking about. Here's this high in 2000. Okay, hopefully you got the dates all lined up this time. Sometimes when I move this around, especially in longer term views, the dates don't adjust right away. So here's the dates we're talking about, 2000. And I'm like, oh, wait a minute, you got to take a much bigger picture than that. I mean, the high was back in 1985. Okay, so when I look at it from 1985, let me see if I can get this to drill down right. And I look at the data in here. What I see is a big ABC corrective action that has a bottom here in 2008, March 2008 on the dollar index, and that we've then started to move up with a first 5-wave sequence for wave 1. And the interesting thing about that is, in the process of doing that, we break that longer term downtrend, and then when we get this wave 2 pullback in here, we pull back right to that trend line. And then we're getting ready to go. So let's go down to the weekly chart. So a couple of interesting things with the weekly chart. I talked about this pullback to this longer term trend line in here for wave 2, right? Well, it's interesting that where did that bottom? Right at the previous high of wave 1, okay? Of the lesser degree, wave 1 within this cycle wave 1, primary wave 1. Okay, so we got the pullback, and this, I put basically dotted lines in here for a support zone. High here, and a high here. We create a little support zone. That's right where we bottom. So now it looks to me like we have gone up in here into a primary wave 1 up, and what I'm watching for right now is I think that we've got corrective action. I do think the dollar is going to pull back a little bit more, but right now it's gone through this X wave rally, and we'll watch and see if it pulls back. Let me pull up the daily. So here's my view of the daily chart, and here's what I think is going on. And you can see what happened here on Friday was a pretty nice little reversal candle in here, and it could be a top. Again, we need follow through. It started to do that back over here on Tuesday of last week, but didn't get any follow through to the downside. So that's what I'm watching for. I think we got a little more corrective move to the downside in here, but that's going to complete primary wave 2, and then we should be off and running in primary wave 3. That's my best picture right now on the dollar anyway. Okay, if you felt like the video was helpful, hit the thumbs up, and if you're not a subscriber, subscribe. And if you'd like to get more of this kind of information on a regular basis, head on over to joehenches.net. Let me show you where that is. Let me pull up the Chrome browser. You just type in joehenches.net or beyondthechart.com and you'll get there. You come over, you sign up for free market update videos. You get those twice a week, Wednesday and Saturday. And if you want more information, check out the membership there. Everyone have a great rest of the weekend. Remember, the market's closed on Monday, so we don't trade till Tuesday morning. Everyone have a great rest of the weekend.